And good morning. It is the 15th of February, 2024. I was preoccupied the last couple of days in this week. Was to be outside for some meeting activity, a couple of presentations I had to make. So here we are on a Thursday morning. The market has been just ripping and snorting for days. Here's that Renko, which is kind of a easier way to look at it, I guess. This is the regular trading session hours. There's yesterday, day before yesterday, and we're off to a start looking at higher ground again today. The micro composite is pretty interesting. This, shooting star, hammer, doji, whatever the hell they call that. Quite a substantial movement 2 days ago, and not really sure what the hell that means or what to do with it. This was the VPOC for the micro composite I had, this goofy thing out here. Now, do I incorporate the three of these into that? Do I draw a new one around these two, which is what I kind of think I would do? This sort of broke the rules for micro composite, in my opinion. It's just simply, I draw the micro composite around overlapping price, and this didn't overlap anything. This barely does. Just a wick test down here, and then off we go. So I'm sort of thinking that I will draw a new micro composite here, if this thing wants to talk to me. And we'll see what happens here. I'll include today and yesterday, and it always does that. Damn it. This is kind of annoying. It's pretty annoying. So, there we go. Okay. So now, if you want to call it that, the micro composite VPOC, drawn as this is down here at 49.85. So we'll see how that plays out in the day. And these are just, completely arbitrary. And here we have the micro composite. So I will change this to 49.85. Well, wait a minute. No, I won't do that. I'll change this one. I'll change this micro composite flag. The way I do these is previous. I changed the text color to black so I have an idea where the hell stuff was. Obviously, this is a previous all-time high, so we're right back up there again. This is the micro composite high. The new one, I guess, is going to be here. Oops, sorry about that. The new one is going to be here. Because this is the oh, that's not correct either. This is the current RTH session. This is the previous Globex session. And what this needs to be is at the previous RTH high from yesterday. That would be 50.27 is that high. So I can put this at, pretty darn close there now. Oh, what stroke of luck, straight at where it belongs. That's the high of the MC. This is the previous MC, which I will change that to black. Okay, now, and then I'll create another one at 49.85, which is the current MC now. It's a hell of a long way down there. And look at that. It's the MC low, previous MC low. That's a long way down. right at the previous naked volume point of control. That's pretty interesting, huh? And the MC low is now going to go a long ways down there. So this is getting kind of complicated now. This is getting a little bit goofy. But try to persevere here. And so we have we have the current MCV POC previous. There's the previous from the last one. And the high is at 50.27, and the low is at 49.72.75. So we're going to change this MC low and maybe leave that one in. Change the colors to black again so I can tell where the previous was by one glance. And then put one in here at well, I don't want to do that, that's for sure. Whatever the hell that was, I don't want to have happen. Adding and stacking, that's an interesting little thing I didn't realize even existed, to be honest with you. Delta quotes, huh? Well, I don't want that on. And I'm not sure how to get rid of a column here, to be honest with you. Well, that's interesting. I never did that before. I've never gotten rid of a column here. I figure I don't want delta quotes on. Well, anyway, I'll have to fix that later. That's pretty stupid. Okay, so what was my low is 49.72.75. So what I was trying to do, and what I did here was, that sucks completely. Yeah, I screwed myself up by clicking something wrong. I've got this delta column working instead of the column I had for all my high time frame levels. So I'm now going to watch the market as I should be. Worry about this kind of nit-nat crap later. Right now, we've had the open. We've had some incremental VPOC movement up and a real tight range of about 7 handles, or 9 handles, I should say. This is the current RTH. This is the previous or full session, and this is the chart. And now I'm going to try to sort out this column over here, so I'll put this on the Be Right Back. Huh. So it seems that I got it back to the way I had it or wanted it, and now I'll worry about these levels at another time, but I've got the previous POC, new MC high, which is going to be taken out here too. It's sweet from the looks of things. And, or it has been already. It's now 28, so I don't have that quite right. There we go. Well, okay, that was fun. Not maybe what I want to be sure I do here. And I could have shut this off and started back over had I been able to. I don't know how that column changed itself like that, but I don't like it anyway. And I'll save the workspace for sure. I could have reverted to a saved workspace, obviously, and not dealt with it. But all I needed to do was change that column from the delta crap to notes. just a cloud notes. I mean, a notes column, not cloud notes, because it's not automatically pushed. This is cloud notes. This is high time frame. This is my my notes to do with the statistics, and this is a pushed from IRT. So, wow, that was irritating. And yeah, what are we going to do now? I would suppose, well, we've taken out the overnight volume point of control. That's pretty simple. We took out the overnight mid. What else? And now we're looking at the overnight high, which is the next highest percentage or probability stat in the open configuration, which is a big question. It opened right here, right there. And so it was within the trading yesterday's range, above close, above settle, but within the range. So it is technically higher in range, not higher out of range. And somewhere around here is the RTH high, but yeah, a previous RTH high. You see how close that is? I mean, there's the open and there's the high. So, 3 handles or something. Kind of silly. Looks like we're not getting any responsive selling or profit taking. We're getting essentially an opening drive. There's our open, and they've drove up here, consolidated and looking for higher ground, and this overnight high, which is a statistic that's quite commonly hit in the RTH session. But yeah, well, humbug, long. What can I do? Get some perspective here. It's real easy to get wound in real close with Bookmap, I think, and not really. I lose perspective on price movement and things like that. That's one thing about it. So, and here we pull back from the high to mid VWAP POC. Is this a mean reversion? Looks like it's going to be. But if you stop and look at this one, what are we doing here really? We're doing higher highs and higher lows. You notice that the migrating or the IB high, which is just the high and the low of the first hour, is continually being pushed up. The IB low, not so much. So now we've mean reverted back to the mid, which is exactly mean reversion. It reverted to the mean. And what's going to happen now? Are they going to go across and grab something below? Probably. Looks like so. Looks like so. All right, what the fuck's going on here? So I have, hold on. Not having a very good morning here. It seems like I've gotten the wrong snap a couple of times for the overnight, which I post every morning at 8:20 on the T Lab. Got one from yesterday. Brain. Anyway, and I'm hoping that the audio and stuff has been properly going here. Mic not muted, all that stuff. Anyhow, tight range. Stats are pretty much hit. The only open stat to the upside at this point is the overnight high, which is right up here. I guess that can be seen with the mouse. Maybe not. Right there. Yeah, there's the mouse. Okay, see it now. And then a tight range. So we've right now in a mean reversion after an opening trend up, basically. Opening drive, no profit taking. You could say this was some, I guess, on the opening drive. So the opening swing is kind of here to here, I suppose. I don't see any way you get on that, something like that. There's no trigger. It's just, bang at the top. Could call it mean reversion for sure. Back to the mean, and 6 handles. So that's sweet. But I would not take that trade with the overnight high stat just above a point or two. And the rest of what I've done so far today is indicative of my concentration level. I'll just watch for a while. That's all. And so what I will do now is I realize that I'm not in tune at this moment yet. Just silly screw ups like getting the wrong snap posted and things like that is flags for me to be cautious, extra cautious. This is the purpose of trading. The business of trading is a probabilities business, and it requires focus and awareness. And, if you're constantly screwing up, as I have been this morning with just little things, well, it's not the time to trade. You need to focus on the market and get in tune with it and not just hit into it like you're killing snakes. That's my opinion. Now, the setup here for the risk neutral is a 2-lot package, 12 tick stop. First target's at 12 positive. Second target is at 24. Move it to wherever. An idiosyncrasy of this setup app here is that you can't put both stops at the same place. So one is at 13, one is 12. The minute the trade is put on, you can put this wherever you want to. You can put them both together or leave it one tick apart, whatever you choose. That's and of course, if you want to trade more than 2 lots, you just have to trade in multiples of 2 by changing the lot size. And then that'll give you all the brackets you need. And then to turn on the trading function, whatever they call it, I use both. I confirm that the lot size is for the multi-bracket, and brackets down here is deselected because that's the multi-bracket takes preference. And I enter or initiate trades with a keyboard, and then I manipulate the stops and targets with a mouse. So that's why I use both. And we'll turn that off so we have a little more real estate there. And yeah, here we go. I have those two views separated. I don't think anybody needs to be bothered about my taskbar or a little white strip at the top. Seems like more focus on the business at hand here. Same goes. Now, when I go to IRT, because IRT windows are individual or floating or whatever you call it, they're not in the container. I have to use the monitor instead of the window. That's why the taskboard and stuff or taskbar and things are always visible, because each one of these windows is an individual floating window. So that's how that works. And that's a nice mean reversion here. Just some thoughts around mean reversion and risk neutral trades. I have to have my trade plan. You can do whatever you want, whichever. I have it set up, as I said a minute ago, I have it set up for a 3-point or 12 tick stop. First scale is at the same as the stop, 3 points or 12 ticks, and then the runner or the second target for the second contract. The whole idea is you put on the 2 contracts. The first scale pays for the potential stop of the second contract. So the second contract is riding free. You're essentially at that point, you're in a 1-lot trade, and the worst you could possibly do is scratch. Now, that's you can scratch, but you have a 3-point stop loss. Much different than if you put a stop at your entry level. It would be the same thing. You could trade 1 lot and put the stop at the entry level, but the chances of being, the probability that you're going to be taken out, that the price is going to go back to the entry level is phenomenal. So this risk neutral trade is a much cleaner, I think, more beneficial, higher probability setup. And as I said, you can do as many of those packages of 2 as you want to, if you're going to trade 1,000,000 contracts or whatever it is. So that's how the whole thing works. But the important part is you only take a statistically verified significant edge, setup that has got a very proven positive edge. And you do that by collecting a sample of those exact trades with those exact setups and the exact same configuration. And you see what the percentage of time that paid out to at least scale 1. And then you can also check for scale 2. That gives you an edge. That's the whole definition of edge, which so many people speak about. The correlation, the closest correlation that everybody's familiar with in business is a casino, or the gaming business from the point of the casino. They pre-calculated a positive edge for each game they play. Let's take 21. They know that if they play 21 with the exact same rules, the exact same setup, that there is a positive percentage of time they will win. They then lean on the law of large numbers. So at that point, once you've identified a positive edge for a setup under the specific context and everything, that's how it can be statistically significant. You can't have random parameters. Stop's got to be the same. Scale's got to be the same. All those things. If you have one at a 3-point stop, and the next time you do it, it's a 5-point stop. The next time you do it, it's a 2-point stop. Those cannot be contained in or calculated within the same data set because they have different parameters. Anyway, so the casino knows that they will have a positive edge of X% on 21 played with the exact same rules. The goal then, as it is with us in trading, is to take as many of those opportunities as present themselves. In our case, there's parameters that we have to look at, the setup type, the day type, all those kind of things. In the casino, it's shuffle the cards. They have the number of cards in the shoe and the number of cards they deal out. And that's it. And the percent, and the payout rules. That's the only thing they do. And the whole point is the law of large numbers applies then, and more of that percentage comes across to the trading business. That is the trading business. It's not a video game. It's not gambling. It's not, I felt like this was going to go up. That's why I spend a lot of time talking about these percentages, these levels, and the parameters. So what led to that discussion was, if I was going to take a mean reversion trade here, back to the mean, I have to have the first scale, or 3 points, range before the first obstacle. So if I got long here, that's 28.25. Well, 25.25 just before the mean, that would be a viable entry. And it could well, that's not to say it's going to stop there. It could go way past it. But you have to have the scale within the first obstacle. That's a rule in my trade plan. And then, there's a bunch of other stuff after that, but that's the first criteria. So if there's not enough range, or as Tom says in T-Lab, meat on the bone, well, then sit on your hands. Remember, there are 3 positions in trading: long, short, and flat. And oftentimes, way more than not, I'm flat. I haven't traded yet this week. It's Thursday the 15th. I had other things that were distracting my focus, and I learned a long time ago I'm not that guy. Well, that's school run 2 down, and it looks like exactly nothing was missed here. So let's take a little bit of a review. We did the opening drive up, pull back, a little mean reversion. They expanded the range just a little bit. When I left, we had a regular trading session high at about 92 here, about 30. They've now taken out the overnight high, which is a fairly common stat. And looks like we've just done a mean reversion. Now there's still a bit of rotational, which can be a mean reversion day. Looks like we're consolidating pretty heavy now, just below mid VWAP, etc., which is pretty obvious over here. They pulled down and they're consolidating right here below POC. Both the full-time or the RTH POC here, which is the darker yellow or brighter yellow, and that's under this. This is the volume profile for the RTH or the regular trading session. This is the volume profile for the full session. You'll see that we've just about taken out the range there. And the darker POC here is the VPOC for the full session, and they are now aligned. The POCs are both here. This is the mid. This is the mid. This is the VWAP. I don't have any other indicators. I don't use them at all anywhere. This is the correlated market of the NQ, and if you see my trading screens here at IRT, Investor RT by Linsoft, there's no indicators at all. These are naked points of control. This is a volume profile. The green is the IB high and low. Then there's the volume, the value high, the value low, or the blues, and the same three mid, VWAP, and POC, and that's it. This yellow boy here is a developing volume profile. Developing volume POC, and the red line is where it is set currently. That yellow line is basically the same as this one, but because it scrolls off to the left, I keep track of the highs and lows of the movement of the POC with these flags here called migrating VPOC, for lack of a better name. And so here we are. Very interesting to see how deceptive candlesticks can be. Look at this candlestick from from yesterday, actually. The candlestick so far from today. But the volume profile, this is the volume point of control way down here. So that's the spot where the most amount of volume traded. And that's pretty phenomenal, isn't it? How would you believe that? I'm sort of wondering myself by looking at it, but I trust the charting. Let's see if I'm right to do so. Yeah. You see here you can see here under here is a big volume spike, bigger than here. And that's why the VPOC is here at 49.85. But if you looked at these candlesticks and oh boy, I'm a candlestick guy, how the hell would you realize that the most amount of volume in the last 2 days is traded down here? And that means this is the current trading day. So in reality, that may or may not be pulled into the volume profile, but I like to do it because it shows me where the VPOC is, and I just realized I had forgotten to do something else here. Oops, wrong thing, sorry. The way I do it is the variable high volume nodes I push to my cloud nodes. And so I only do that with the most current one. Now you can see these greens, and I will turn that off on this previous one. I've discovered that it was a big, whoops, I can't seem to get that right. I've discovered that it was quite a big problem in terms of workload on the server, on IRT, and by extension, God damn it. And by extension, I was getting a lot of delays and lag time delays up here. So there we go. Turn those off. Apply. And now these high volume nodes will be pushed to my book map into this high volume node column over here when it updates. And it, if you see, there's an indicator here when this export's going to happen in seconds. This is for the price level. This is EQ, NQ. And this is the only thing that's pushed from the micro composite chart is the high volume nodes. So that's how that works. And now what? I keep hearing random noises, and I discovered that one of the sources, I believe, is somehow or another one of my new monitors. I've got a few monitors here. The primary trading monitors are 32-inch 4K LGs, and they have speakers built into them somewhere or another. Somehow or another that got turned on at some point. I also discovered that my Jigsaw Journalytics was pushing notifications for upcoming numbers. That was one of the sounds that was puzzling me while I was talking here or listening or whatever to hear on the stream. And then I'd hear some random noise, bing bong or something, would come out of no place. And I was not sure what the hell was going on, but I've tracked it down to that. So hopefully that won't be too distracting. And yeah, as I said earlier, been out of touch with the market pretty much all week. The market's been going crazy. It's pretty obvious by the micro composite here. These are just daily RTH candles or bars, candlesticks in this case. This was day before yesterday. That was a regular rodeo, right? And then this was the CPI number day. This is yesterday where they just did what one trader I know refers to as a wick test, where they came down here and tested that and then back up they went. And here's today's trade so far. So, yeah, one huge gapitosis down here that never got remotely closed, just closing the gap by a skosh right here with today's trade on the higher. I have not actually, because of my lack of concentration or participation in the market, I don't have those gaps marked, which I very definitely 99% of the time do have properly marked, and that would be here in the high time frame column, for lack of a better spot to put it. I try to reserve this this column by the name of the open type. In this case today is higher in range. The percentage probability for each of the stat levels or price levels to be hit in this configuration, and then my migrating VPOCs. That's what this column represents. This is the cloud notes column, which is pushed directly. These are the price levels pushed directly from the homework statistic study done in IRT. And that's it, baby. Ooh, look at here. Out of bed we go. Now, are they going to get down here? And they're going to take this stat, which is something close, I think, previous close. And they could mean revert back up again, or it could just fall out of bed and, head for China. Who the hell knows? That's the magic of the market. And anybody that tries to predict, tells you they know where it's going, got to call horse bullshit, and if you've run across anybody that really actually does know where it's going and can prove that, you give me a call. We'll talk for sure. A lot of people say so, but show me their account. That's the reason for this stream. It is my virtual trading journal, and it's obviously visual and audio and audible, right? And the reason for my narration is when I review the stream, I can hear what I'm thinking and obviously see what I'm seeing. I take no trades off stream because I feel like that reduces the credibility. And my whole intention is to be completely transparent here too, because I believe that's accountability, right? And so many of the online gurus and trade room guys, it's all RMT, right? They're all doing rearview mirror trading. Well, any goddamn genius can go, oh, look at here. Well, we tested up here. This was exhaustion. We came back here. We took 450 out. We came back here for exhaustion and tested at 12, only 12 stops, and we sold off. This was our trigger, and we sold off. Oh, yeah. But did you do that in real time? And that's, when I take screen snaps of both IRT and Bookmap for every trade, showing all of the entry, stops, targets, and the movement of each, because those lines are captured and drawn on Bookmap. The entry and exits and stuff are also represented on IRT. And I journal in two places. I have a Journalytics online from Jigsaw, and I have a local journal which I built that has the trade information automatically exported from Rhythmic every day, and then that is programmatically ingested into that local journal. So I'm trying to be as professional and businesslike and, not kidding myself, as realistic and as transparent and credible as I can, because it's important to me. And if it helps somebody else, I'm happy to share any of that stuff, and that's great. But, that's not the point. Yeah, it'd be great to be a YouTube influencer and have, Mr. Beast, bunch of subscribers and make, hundreds of thousands of dollars a year doing YouTube shit. That'd be great, but that's not the point of why I'm here. And I'm pretty sure that's not going to happen. I can't imagine why anybody would be particularly interested in listening to what I have to say about the market or watching my trades. If they're interested in risk neutral trading, that's great. It would be nice to have a bit of a community for some dialogue and whatnot. That's always fun. Trading is a lonely business. You're basically by yourself, at least unless you're in a prop shop. You're by yourself, and you're, you have nobody to rely on but you. And that's, fortunately, That's how I've lived most of my life. My own business, my own, I was a commercial pilot, flying cargo most of the time, single pilot over open ocean. Flew a lot of cargo up and down the Caribbean in my own airplane. So, Africa, Asia. Some folks have a different life, but for me to trade alone, I have 2 standing desks. I don't have a chair in my office. I start about 6 in the morning, and when I get through, it's around 8 o'clock at night every day. And on the weekends, I do reviews and things like that. So learned a good work ethic early on, growing up on a cattle and horse ranch in Montana. In fact, none of my family has ever had worked for anybody else. I guess I'm probably the first one here lately, later in life when in another career profession that I have, a global systems administrator and project manager for a oil and gas services company. Guess I'm the first one now that I've never thought of that before. That's why I think trading is so appealing to me, because it is your own business. It's your own business with about the smallest amount of investment capital or startup capital that, sort of being a hooker. I don't know any other business you can start with for less. You get a trading platform and a couple of monitors, and I guess everybody's got a computer or another, and you can do one of these prop shop evaluation things, and you can actually be in business for yourself for, I guess, next to nothing. And then, grow the business and have your own account, and then your investment, of course, will increase, but so will hopefully your profits, especially if you take a view of the business and operate it as a business of probabilities, like I described earlier here. And I try to do every day, so anybody bumps into it, they'll know what I'm doing and why. And why I'm staying out of this is I have been cold from the market all week. I'm getting back into the groove, and this is a mean reversion day. Now, here's the RTH low. There's a previous MCVPOC. What an amazement that happens to be aligned right here at this liquidity, and that price comes down and checks it. It's outside in. This is a very, very viable trade setup. A mean reversion outside in. There's plenty of plenty of range to the first scale. There's a lot more than necessary, actually, which is great. And then you have your targets at mid VWAP, and the real mother lode or the whole purpose of the mean reversion is to revert to the mean, and that is the VPOC. So this would have been an excellent long. You could consider this to be 1,323 stops came out right there. That's a lot. And then 3. Not so much. That's exhaustion, right? They took out all these stops below the low, and now they're going to revert back to the mean or close to it. So you would have been in here at, say, 15. 17, you're scaled right in here, and you're sitting pretty on a runner. That's how mean reversion works. Mean reversion. That's how mean reversion works. Utilizing risk neutral trading philosophy or practice or plan or whatever the hell you want to call it, methodology. And I'm not involved in the trade. So I'm sort of going, oh, that's a bummer. But again, RMT trading, right? Rear view mirror trading. I was standing here talking and not paying attention really and questioning a couple of things. And when you go back in the rear view mirror, you go, wow, look at here. There's 1,300 stops come out, comes back, and there's only 3. That's definitely exhaustion, right? Or divergence. So that's high probability we're going to trade higher. And do we have scale? Do we have enough range to our first scale? Yes, we have more than enough. Where's our target going to be? Well, the second target would be ahead of the mid, then the VPOC or VWAP, and then the VPOC. Okay, that's where trade management comes into play. What would you do? Well, you'd be risk neutral. Your stop would be down here, three points under here, so down around 11 somewhere, which is also good because you're damn near under the low. Anyway, now what do? Do you just leave it there and let it go up until it tries to? You've already scaled to that would be your break-even point, right? So then, what I would do, because I'm just that way, I don't know, just sticks in my craw to leave money on the table, or to have it go a long ways and then come back on you. At this point where we've started, we've had a swing low and then we've traded up higher, I would have trailed up to this swing low here, which is this low volume node. Okay, for price management. What would I do again? Would I do that again here? If so, it would be down here under this consolidation. I would be trailed to here with my trailing stop. My target remaining up here. And probably if I'd scaled to here, if I'd trailed to here, to this low volume node, I would have put my target ahead of, a few ticks ahead of the VPOC. So you're talking essentially 11 points profit in the trade, assuming you get to the T2. Worst you got is about 14 ticks, or say 3.5 points by trailing. And that's one that trade management is the hardest statistic that I've tried to figure out, even tracking it with my local journal and with Journalytics mostly to an extent also, but with my local journal, it's, I start from the higher time frame, which is the opening type, then the context for the day, then the structured setups, then those setups filter, and you can actually filter down to the exit type to try to determine, how many times I get scaled, how many times I get to this. And I don't ever vary the initial setups because that would require a new set of data, a new sample set of data. If I have a 3-point stop and the first scale or risk neutral scale is at 3 points positive. Okay. If I change those, first of all, if I change the stop, I have to also change the first scale so that they equal out to achieve risk neutrality. Then I have to capture a whole new set of data of instances of that new setup in order to see which one has a higher probability. That's how it works. Standing here in front of these flashing lights and fancy colors really isn't the job at all, isn't the business at all. What you're looking for is a structured, identified positive edge setup, which would be the mean reversion. That's exactly one of mine. Mean reversion rotational actually is the name of the trade. Was there a range? Yes, there was. Now it would be scaled, and the question comes down to trade management. So I don't feel bad that I didn't take that trade. I kind of do because I was standing here. But, that's why I'm not trading, is because I wasn't aware enough to see that very, very, very obvious trade. How obvious can this be? Trade down to the absolute outside edge huge stop run, take out all those stops, and then come back down to our exhaustion of only 3. None more left below there. Where are they going to go? Well, they're going to trade back up and see what's up there. And now we're having a consolidation around this period here. And highly likely that they'll attack the mid, then the VWAP, then to the POC, which is by definition the mean reversion target or point or whatever. So we'll see what we see here. Disappointed that I didn't take that trade. I would not have achieved my target, but I would be scaled and have a little bit in a couple of pizzas secured by this point. Yeah, so here we are consolidating. Now we're going to lean on this big buy bubble that's not getting any traction. See if they can get it up here, which would have been, and then the POC would be our target. It's all rearview mirror trading, just hypothetically narrating the trade I should have taken and why. It is very definitely a structured trade. It's a mean reversion trade. There was stops taken out. Trigger is the exhaustion when there were no more stops to get. So your trigger would be perhaps when it clears this little consolidation area right here, depending on how you want to go. Or, if you're aggressive, grab it down here at the exhaustion, whatever. Your scale is 3 points above. Let's say it's at the top of this thing. So that's 15.5. So we go to 18.5 as our scale. We would have been scaled right up here. Right here, actually. Just, it's basically minute or so off after the entry. And now you're sitting on a scale at risk neutral. Worst you can do is scratch, unless you're a complete idiot, and move the stop out away from the entry, which is, why would anybody do that? I mean, Jesus. I guess they do, but I can't tell you the improvement or the dramatic change that the risk neutral concept, methodology, trading style, whatever you want to call it, has on your psychology, at least on mine. I'm very fixated, risk averse, and that first few minutes when I've got the full 12, well, it's 24 ticks stop or risk on per package, per 2-lot package. And the second that's risk neutral, it's like a different world. And it affects how you see the market. Your monkey brain calms down and all the fear and flight crap goes out the window, and it's a real big deal. I owe that pointing the concept out to me to Tom B from the Traders Lab. It's the book map Discord chat room called Traders Lab Tom B. Highly recommended. There is a link to it in the description here. You don't have to be a member of or a subscriber of Bookmap. You do have to join the Discord. I mean, that's just how you get in there, right? So what? Nobody's trying to sell you anything. Tom, serious professional trader for 40-something years, has a lot of good philosophy and thinking and policy and or habits, whatever you want to call them, that I appreciate and I relate to. Never tries to sell anything, never tries to pimp anything. It's not a trade calling room at all. But there's quite a few people in there that do, I think, pretty well. Of course, there's like every chat room, there's a few that like to hear the sound of their head rattling, or the sound of their own voice. But there's some really good, I think, people with good thoughts and good ideas there. And Tom streams every day pretty much from 10:30 to 12, I think. And it's a narration. Again, it's all rearview mirror. Very seldom is he talking about real-time stuff. But a lot to learn from that, from his concepts. And that's where I picked up the idea of the risk neutral thing, and why it hadn't occurred to me years before. It beats the hell out of me, but better late than never, right? And yeah, so I'm not sure what we're going to do here. I will leave the stream run. It's 10:26 local. Well, interestingly, yeah. Obviously, the local time is down here, and this is Central Standard Time, which is same as Chicago, where this market trades conveniently. Up until for the last 11 plus years, we were living in Kuala Lumpur, so we were basically, depending on daylight savings, we either 12 or 13 hours ahead. Market would open at 21:30 or 22:30 there. And I really actually liked that. There were no distractions. Everybody was in bed. Everything was quiet. I could just stand in my office and focus completely for a couple hours. And I really liked that. It's been tough for me to get used to relocating back here to the Central Standard Time area. After all these years, but we did. So what are you going to do? What am I going to say? A couple of years ago now. Still kind of getting my feet on the ground with getting used to how to structure my life and things around trading because of the concurrent hours. And I prefer to trade in the opening RTH opening hours. A morning session, so to speak, rather than the ETH or London or even the afternoon. RTH afternoons are not my favorite. So, okay, so our little hypothetical trade here with our great exhaustion entry trigger. It's a structured trade of mean reversion, rotational context, mean reversion day. And if there's any question about that, this is about as rotational as you're ever going to get. Almost perfect kurtosis on that profile, that distribution, right? Trade up, trade down. We have not taken out, unless I'm completely goofy here. Yeah, we have not made the IB high. We took out instead the IB low. So that IB stat has been satisfied, but on the low side. And, go figure. All they did was push up that high. One would expect when we're up here, they're going to come back up and take that IB high out. They only had a couple of minutes to wait. But instead, they sold straight off through the VPOC in mid through the value area low and consolidated and then took out the IB low. Now they're consolidating just above it and below the developing value area low. So, go figure. That's about as rotational and mean reverting as you're probably going to see. Yes. Which brings me back to the fact that this was a structured trade right at, I think it was 17.5 was the scale. So right about there. Been sitting on all this consolidation, not worried or concerned because probably trailed up to this swing low for trade management. But if not, you would still be ahead of break even. So the worst you could do is scratch. And you're sitting there waiting for it to get to your targets. The first possible target would be this mid, then the VWAP, and by definition, the VPOC, which is the mean. So there you go. In the volume profile. I think, or is it the middle that's the mean? Either way, whatever. You get the point, right? And assuming, in my case, probably could very well have gotten antsy and saw this consolidation, so brought the stop up here tighter to manage, for a bit more trade management and been taken out over here. So there you are. That's still 17.5. That's basically would have been break even or break even on including the first trade. So here we go now, looking at our mid and then VWAP and then VPOC. All right. Now there's a couple of typical actions that retail traders normally do. Tom B has a saying that's pretty good. It's think like a retail trader, don't act like one. And you see a lot of posts about, oh, I got taken out, stopped out to the tick and all that stuff. It's because they put their stops in all the same spots. And doesn't take a higher time frame with deep pockets long to figure out where they all are, and they go get that fuel, just like right here. They did a stop run down here below the low, and bam, there was 1,300 of them with stupid looks on their faces, right? All of a sudden, they knew that. They got the fuel, and away they went. Okay, same idea with the mid and VWAP. Typically, retail will sell the mid when it's approached from below. Same with the VWAP. And converse, when approached from the top, they'll buy it. I mean, that's typical. And look at this. We come up here, boom, they sell it down. Boom, they sell it down. then pretty soon they'll trade through it because they've sold these, right? Where's the fuel now? Where have these guys put their stops? Well, here maybe. Here maybe. If they've got a lot of money or they're trading sim and they can afford the risk, up above the VPOC. What does that mean? That means that this fuel is living up here for a higher time frame to go get. That's why mean reversion works. It's pretty much all about there's a philosophy that the market's job is to find value and all that stuff and the fairest price. I'm not sure I buy that. I think the majority of the market in the daily trading of the market is speculation. It's traders like me, like anybody else that's, all these wizards in all these rooms and prop shops and all this stuff. They're trading. They could give a good goddamn what the price of the ES is. What they want to know is how many ticks could they take out of the market in that day, and how do they do that? Well, it's no secret that 90 gajillion% of retail traders fail. They have no clue about what direction the market's going, what the levels are. They go at it strictly as a gambling video game kind of thing, and there's going to be a buttload of stops right up above these levels because that's what retail guys do. And the higher time frame people that are making money know that. They sold to them here. Right? They sold all these guys. Who do you? This is a zero-sum game. Got to understand that. For every seller, there is a buyer, and vice versa, right? So when every one of these guys sold, somebody bought that. Okay, and how does a buyer make money? Price goes up. They know that all these people who sold the short have their stops up here. What's the perfect thing to do? Take the price higher, and then all these stops get hit, and up you go. It's actually, still sounds too simplistic, but that's really what is happening on various time frames. Obviously, there are higher time frame hedge fund guys that have bought something, and they're typically hedge funds and all those people are buying stock. They're not trading futures. Futures are developed as a hedge for options and stocks. So if somebody's long stock, they be short futures. That's the way the hedge works. Okay, so that means that there's not a lot of long-term commitment or resolve in these prices, more that it's especially on the intraday time frame. In my belief, it's speculation. I don't know that any dentist in Omaha thinks that, I'm going to buy some S&P if it gets above 22.5. The hell do they know? Who's standing here looking at these screens and these markets? Who's looking at the intraday movement of these prices? It's speculators. It's not investors. That's my belief. So that's my belief. And I'm hoping the stream is flowing as it should. Looks like so. That's really this captured and streamed to YouTube via OBS, the latest version, which is a phenomenal. It's phenomenal to me, the quality and depth and features feature-rich software that's out there free. Why is it free? I got to believe there's motivation. Oh, look what happened. We've traded through we took out 360 stops, running up through the mid and the VWAP. Took out 39, and we took out 360. And the VPOC, they traded enough shares to migrate the VPOC from 1540,467 to 15,481. And now here goes some more stops out, another 600 of them, because they were right above the old POC. What am I, a soothsayer or a mystic? We're going to mean revert. I go back in the stream. We're going to mean revert from here. I didn't take this trade. It's rear view mirror, but it is viable. And I have justified exactly why it is one of my structured trades and why I'm a donut for not taking it. 1,300 stops out. 9 stops. Oops, where'd it go? 14 or 9, depending on how wide you get it. That's the trigger. Scale is 17.5. It's risk neutral. You sit on your fingers and chew your fingernails along here for this consolidation, and your targets are ahead of the mid, ahead of the VWAP, ahead of the POC. And guess what happened? And the reason they're your targets is because all these guys that are shorting have their stops up here above these levels. That's retail's go-to soup, man. And here we go with here we go with exhaustion to the upside. But this doesn't qualify for me at all because there is no zero range from the location to the first obstacle. And where would the stops be? Where would the targets be after that? But it doesn't matter because there's no range. The first obstacle is POC, and we're on it. So case closed. That was a beautiful, structured, vetted trade for me of mean reversion rotational. That's what it says in my journal. I mean, that's the name of that setup in my journal, both of them. And I can't show them or add those, display those on the stream because this trading machine doesn't have any office products or anything involved with it. Yeah, well, that's so. What back to what I was saying? We took out all those stops, and that turned out to be about 675 of them right there. Picked out another 144 up here. Now, will they get enough fuel and have enough horsepower to get up here to our previous ET or to our current high of day, IB high, and our stat, which was just taken out, by one tick? Will they get back up to that? I don't know. It will be interesting to see if they get that high. That IB high. The IB this is the IB low. Up here is the IB high. It's no mystical, magical tour. It is just simply the high and the low of the first 1 hour of the regular trading session, period. But it's something that was watched by many traders back in the days of market profile. And there's a very good statistic that says the high or low, the IB high or low, will be taken out by the regular trading session price 90+% of the time. Doesn't say which one. I mean, you can calculate that, and we do, but it says that one or the other will be taken out in the regular trading session. And it doesn't say 1 second after the IB has been set, which is at 9:30. It doesn't say 1 second before the close. So, it's a stat, but it's not really very tradable. Used to be more tradable to say, well, if one or the other has been taken out, and in this case it's the low, the IB low was taken out right over here. And probably before that, but anyway, right there. It was taken out because it was set at 9:30. So this ceased to move anymore, didn't go any lower after 9:30, and this didn't go any higher after 9:30. The IB is set. Then if price penetrates or exceeds it, that says the stat's been satisfied. The IB, in this case, low, was taken out. Now, obviously, there's a much lower percentage of both IB high and low being taken out. So I've heard people talk about, well, if one or the other, for example, in this case, the low is taken out, it's a very low probability that we'll have a neutral day and take out both. So you can lean on that and trade against it. But recently, we've been having back-to-back neutral days where, meaning both high and low were taken out. It's almost commonplace. 2 or 3 in a row. And, and frequently within a week or so of each other, sometimes days. So I'm not sure what's really, the market has evolved. The market has changed. That statistic may not be as valid as it used to be. This is the developing value area high. This is the developing value area low. Now, the value area high or the value area low, wherever they went, are from the last regular trading session period. This is developing. In other words, it's changing or moving. That's how that works with these levels. That's how the naming convention on these levels work, and then the theory behind them. And now this was the micro composite high put in by yesterday. And now it's going to go up here because the micro composite is just the higher low of the group of days included in the volume profile with overlapping price. And I just reset that this morning and talked about it earlier on the stream. And actually, I don't know what would happen if I included this random. Typically, I don't include these random outliers like that in the volume profile. It wouldn't be included in this one because it doesn't overlap any of those prices. So that's my thinking. However, very definitely yesterday overlapped this, the high, the open, and the low. Not the low, but the close. That's how bar works, right? It's open, high, low, close. So whether this volume profile should overlap this one or not, that's a judgment call. Right now, this is today, this is yesterday, day before. Now, what would happen if I do that? Here's the volume profile as it stands now, the volume POC as it stands now for the last 2 days. Well, it doesn't change at all. So perhaps it's valid to do that because it gives us a lower microcomposite low. The microcomposite volume profile stays the same, or microcomposite volume POC stays the same right here. The high volume nodes are, we add a couple of high volume nodes and we pick up these days. So I'm going to leave it like that and see what I think. It's completely subjective or objective, whichever one it is. Up to me. There. So we tested up. We got 144 out. We got 1. We got 16. We got in a sense we got rejection or exhaustion, and now we're trading back down. As I explained earlier, there's no possible way to short this, in my opinion, because its maximum you had to the VPOC was only 2 handles. What the hell? I think that I am going to do my usual, which is to keep the stream running, get a bite to eat and a couple of things. I do that because I don't want a situation to arise where I come back into the office here and see a potential trade setup that in my opinion, needs to be executed. And I won't do it because I don't have the stream up, because I've committed myself to taking trades only on stream. A couple times that's happened. Only once that's happened that I've done that. And then I had to go back and replay the Bookmap records everything, all price movement, all entries, all everything to do with each individual trading day. So I had to go back in, replay that day, narrate the trade in order to have that be part of the stream volumes, which is, needless to say, not a lot of fun. And the way around that is I start the stream in the morning and narrate trade if that occurs or not, and close the stream off before I have to go on school runs at 14:30. Makes for a long, 6-hour stream, but if there are trades involved in the stream, or if I do take trades, all of the timestamps and the chapters are there, and I try to pick up, conversations that I think are meaningful, that I want to reinforce to myself, like missing this mean reversion trade from the lows with my perfect setup, all parameters perfect, but not taking it because I had been was out of step with the market for the last few days. And I'm real conscious of over trading and trying to be extremely risk neutral or risk avert, and making sure I don't do that. That's uncontrolled trading and things and I still do things that I come back and here in the stream, make trades. I come back in the stream, go, oh man, that doesn't look the same way to me now. But that trade that I did not take earlier played out absolutely to the T, the mean reversion off the low. So that would be one that I would timestamp and have that in there for review, assuming that I have some trades today or have a trade today. And I often will only trade once or twice in a day. And, like past 3 days, nothing. That's the reason I let the stream stay on, so that if I come back in and see an opportunity that's verified, vetted, has a problem, has a statistically proven edge, we'll take it. I don't want to be held up with the fact that I don't have the stream going. So this weekend, hopefully I'll be able to get back into getting a longer be right back music set up, so that it's not just this walking bass looping. So, a few overviews here. It's pretty obvious. Again, this is the full session volume profile, which started at 1700 or 5 o'clock last night. That's the full session. That's when it opens. The ETH session opens, and the combination of the ETH and the RTH is the Globex. We used to call the Globex. It's the full, and I just call it full session up here to try to not confuse people. You see that this is the Globex VWAP over here. So, in my world, it was Globex, and they used to call the regular trading session the cash. But anyway, it's pretty obvious what we've got. We've got a bit of excess on the low of the full session, but Jesus, that's pretty perfect as far as a volume profile or histogram. There's a little skew to the downside. Similarly, there's a little volume skew to the downside, and this is the current RTH session. So there's, that's just about as evenly balanced rotational auction, open auction, auctioning, what is auction market theory, whatever you want to call it. That's about as balanced and rotational as you're going to get. So another reason to use caution, and don't make up reasons to take trades. Another real benefit to the concept of, which is, I believe, the correct concept of the trading is a probabilities business. And it's, in order to be able to trade, I must have a statistically proven edge or setup and specific criteria associated with each one of those setups. So it's not random. You anticipate, you think, okay, if price gets down to, let's see if I can do this. I'm not very good at driving this thing here, but let's see if price gets down here. Where'd that go? Here, right? Yeah. Okay. So you're waiting as this trade is coming down. Doom, 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 doom. As this trade is trading down here, you're waiting for this. Okay. And when you're anticipating that this is going to happen, and you're waiting for this stop line or stop level to be taken out below that level, and then see if there's exhaustion or not. And you have an anticipated scale and an anticipated target. So you have an anticipated entry point. The whole trade is planned out and anticipated or understood before it happened. It's not any kind of I think this, I felt that, I hit into this. It's not anything to do with scalping where it's just quick. You're just in and out trying to dance with the movement of the market. That's not how this works. And I feel much more comfortable that way. I'm not saying it's the only way to trade or the right way, as I don't really believe there is one, because there's so many ways to skin a cat, right? To use an old expression. And as I said earlier, every futures trade is zero sum. Every time I short however many, somebody thinks that it's going the other way for that same amount of trades. For every short, there's somebody that thinks it's going long, and vice versa. So, there's no, in my opinion, right or wrong way to do it. What the way to do it that works for you is the way to do it. I believe that with the high crap out rate or washout rate of so many retail traders, the way they typically trade is not right for me. And I find the risk neutral probability trading with statistically proven edge or probability for setups is the way to go. And I think all anybody with a brain has to do is look at any town that has casinos in it and ask yourself, who in the hell do you suppose is making money? The guys who come in without a plan, without a level, without anything, and maybe they're going to, their strategy that in their brain until the alcohol kicks in, they're going to count cards, or the casinos, which have a statistically proven edge, and they play exactly the same rules every time. And their only thing they have to do is let the law of large numbers manifest itself, and you do that by taking as many instances of that particular setup as you can. In their case, dealing as many blackjack hands as possible. In our case, having that structured setup with the specific rules manifest itself and take it. And I screwed up today by not doing that with that mean reversion off the lows. We were on, and the thinking there is we're in an uptrend until that point. We had been higher highs, higher lows, and we've been basically trading up, identified easily by the way that the IB high had been pushed up. Okay. So that meant that this, and looking at the general trade, mean reversion was happening. Where did that exactly occur? Around here, I guess, where they took out those stops and then turned it around. So we're mean reverting, right? And again, the kurtosis of the profile. It's obviously not a trend. A lot of stuff, but I missed that trade setup, and it had all the parameters. It had the range to scale. It had the range to targets. The targets were in the proper order. The POC was above the VWAP, and the VWAP was above the mid. Not that the mid and the VWAP really is that important, but definitely you want the POC on the other side of it. And all of those things were in place. Plus, there was a trade down to the outer edge, and there was exhaustion. So, yeah, all of those things fit nicely and perfectly in that trade setup. And I should have taken it automatically. But my hesitation I've tempered myself, as I have said today, because I've been out of touch with the market, haven't even looked at it. All day yesterday, I had to be somewhere else and given a presentation about something completely different. Had no clue what the market had done. So, that just drop in cold and start whipping and spurring is not the right way to go, in my opinion. Here, none of these would be along. This could be, nope. Let's just look at this chart. There's no range to scale because the scale has got to be ahead of or before the first obstacle, which in this case is the mid, for any of this trade down here to get on along. VWAP or mid to VPOC is a structured trade, but there's no range. It's 23 to 25. That's only two handles. And there's all the buttload of, the VWAP's in the way, right? And then on top of all of that, I do not take POC trades out. That's diddling in the middle. And that's been drilled into me for years since market profile. So I don't trade that. So in other words, I don't really have the range or the justification for a trade near this area or a mean reversion back to here. And if you just look at it from a point of view of this entry area or this low volume area to the POC, yeah, it's, 5 handles or so. But I can't overlook these obstacles in the way of the scale and the trade. So another classic day of sitting on my hands or narrating or watching and there's nothing wrong with go out and take a walk in the sun. It's a pretty day, you know what I mean? That's life's what happens while you're making other plans, and standing in front of the screens, not trading but narrating gives you screen time, makes you more familiar, a lot of stuff, but it's not necessarily all there is to life. There needs to be some balance, and I'm not good about that because I work basically 24/7. Not continually, but start here on this thing. I start in front of these screens at 6 a.m. I post news and earnings stuff to the T Lab. It's just kind of a little couple of posts a day I make, which are just kind of to contribute what I can to the overall effort and the stuff that Tom, all the stuff that Tom shares. So I post that at about 6:15 or so, and then at 8:20 I post a specific. I can actually show you that. At 8:15, this is the T Lab setup, and we don't need that, and we don't need that. I post this. Screen grab of that, which is the overnight session, and shows back with some stats, VPOC, VWAPs, those kind of things. The dark blue light middle is the overnight session. I'm sorry, is the day session, and the grays are the overnights. So I post this basic view, shows naked points of control and some other levels and things that folks that don't are members of the T Lab, but that do not have IRT. I just thought it might be helpful, and several people have expressed gratitude that it is. And this, got all the numbers you could imagine across there for both the ES and the NQ and the MES. So that's what I post every day at 8:20. The price levels here, all of these price levels for which are pushed from IRT during the overnight or the ETH session, and then during the RTH session. I also share a link to that via Google Docs, where they can enter that link in their Cloud Notes column, and then all of those IRT levels appear just as they do here on mine, just to try to help, contribute what little I can to the T Lab and Tom's efforts, which I admire very definitely, and very definitely recommend. Again, you don't have to be a subscriber or any. I mean, obviously, it's helpful to. It would be helpful to. I can't imagine being in the T Lab and not having access to Bookmap, because that's what most of the conversation and everything else is all about. You know what I mean? But there is no requirement that you have to be a subscriber to Bookmap. You have to join the Bookmap Discord chat group, room, whatever, server, whatever it is, and then go to Traders Lab. And that's it. I think it's Traders Lab Tom B, if I'm not mistaken. The Traders Lab dash Tom B, I think is what that room is called. There's a link on my Discord. There's a link here in the stream description. Takes you to the Bookmap Discord thing and whatever else. I don't know. Anyway, so there you go. And here we, now you could kick yourself and go, oh yeah, look at that. Just exactly, it's good, heading up here for mean reversion. So what you do is you didn't have the possible range for the trade to go on down here. It wasn't statistically proven or viable because of the lack of range. So what do? Well, now you start tracking the mean reversion opportunity the other way. You're ahead of, now you're 25, you're at 9, there's 4 points, right? You get up in these levels at the ETH high, the RTH high, which is, or IB high, which has not been taken out yet. That's, you know, and you could look for a mean reversion back to the mean. And there's enough range for the scale. There's no obstacles in the middle. So that would be a viable setup. Short mean reversion. And in this case, we have a rotational day. And the majority of trading days are rotational or auction, open auction, whatever you want to call them. Much more so than our trend days. And there's a statistic about that, but I don't know it off the top of my head, nor have I calculated or, that statistic myself. So I hesitate to say something about it, but yeah, that's the deal. So you need to be good, or in my opinion, you need to have good skills in mean reversion trading. And the ES is a pretty good one because it gives you a good range typically. It has plenty of liquidity, and it has relatively consistent movement. The NQ, or the snake as some people like to call it, it's got huge range. It's real volatile. It's light. It's thinly traded, and it'll slide past a stop or a level, half a dozen handles easily because of those traits or traits of that particular instrument. It's lightly traded. It's volatile because of its liquidity being thin. There you go. There's so far today, more than double. Well, just about exactly double contracts traded on the ES as compared to the NQ in the same time frame. So there you are. So yeah, thin and volatile. The snake, baby, going to dance with the snake. And I actually traded the NQ for a long time before I moved over here. Was funded at a private account, whatever else. I did trade the NQ and was rather successfully. But because of the T-Lab, and that's before I was using the book map, and I try to, when I find in this case that that there are several aspects to the philosophy and the thing, the mindset around risk neutral trading and that stuff, I try to stick to that. I try to not vary from it because it's, from a statistical point of view, all the variables you throw in there degrade the statistical significance of the data you're trying to capture. So, for example, a risk neutral setup of 3-point stop and 3-point scale and whatever else on the NQ would be a joke. It moves, you'd get stopped out more than you knew it hit you. So that. And if, depending on the count size and your risk tolerance, I'm okay with every 2 lots, you risk 12 ticks. That's $300. So every group of 2 that you put on, every package you put on is you're risking $300 going in, or 24 ticks, or 25, depending on if you move those from, the 2 stops together at 12 or leave it one at 12 and one at 13, as I talked about earlier when I activated the multi-bracket within Bookmap. So, there you go. It's all about risk tolerance, experience, and in my opinion, one of the biggest factors is account size. If you can Guy was talking about on the chat thing here the other day, was talking about one of these evaluation outfits will let you have a whole bunch of evaluation accounts or whatever it is, and then you can trade copy them. So this guy had worked out that what he was going to do was trade 100 contracts by having enough of these evaluation accounts that he could trade that number of contracts and not violate the too many contracts traded on the one account rule, completely discounting that he was going to lose his ass in spades with the first loss. I mean, with the first stop, of course. And he's paying these morons. Well, they're not morons. They're clever people, because their whole business model is that retail traders are going to go broke, not get funded, be successful, and likely go broke, but will continue to keep paying for these evaluations so they can keep their dream alive. So this guy's, got 10 accounts at $50 a head. He's paying $500 a month to some bunch of yahoos that are just laughing all the way to the bank. And he thinks he's going to get somewhere because he can trade 100 contracts. Holy shit. He can't trade one contract profitably. That's something that's always amazed me about all of these. Some of the advice you see from some people is, don't trade sim, don't trade these evaluations. Why in the world, if you cannot trade a sim account or one of these evaluation accounts, which you have a bit of skin in the game because you're paying them monthly, if you can't trade that profitably and make, let's say, a $50,000 account's got a $3,000 target. If you can't make $3,000 relatively quickly, what in the hell? Why would anybody imagine that they could put their own capital in an account, fund their own real dollars, and be successful? Why? I mean, obviously, I can tell you why. They know nothing about trading. They know less about the emotional impact of trading, especially trading live and real life. If they get nervous and start pulling the trigger like they're tapping their leg when they're on an evaluation account trading sim, and the only skin they got in it's if they do a reset for another $40 or something. Watch what happens to them when they've got their own 1%, or in the case of most of them, because they don't have enough money to put an account for more, say $5,000, when they've got a 20% of their own capital at risk. It's just ridiculous. I mean, really ridiculous. And those are the bulk of the people that produce the statistic that's so widely known and talked about, that 90-something 5 or 6 or something percent of retail traders go blow up. And that's the reason, because there are so many of them that are sold this idea and this dream by companies who want to do nothing. There's one of these outfits that, this is the most amazing thing for me I ever heard in my life. Why anybody would buy into this is just phenomenal to me. Most all of these companies will have a trailing, a daily loss limit and a trailing drawdown that'll trade your profits up, and then you can't draw down below that. This outfit calculates your trailing drawdown on unrealized intraday profit. In other words, you get in a trade at, here we go. You get in a trade at 25. It goes up to 35, back down to 30. You get out. You've made 5 points. You haven't taken any heat. You haven't lost any money. But your trailing stop has trailed you up by 10 points because they're calculating it based on unrealized intraday profit. Unrealized profit. You were in a trade, but you didn't take it off it. Oh, can you imagine? And people just lining up to pay this idiot money. I guess it's like W.C. Field, or no, it's P.T. Barnum. There's a sucker born every minute or something like that. Jesus. I've tried to tell people about that and had them argue with me. So, note to self, shut up. Probably shouldn't even say anything about it here, I guess. Just venting kind of, but this floors me. All right, so here we go. We've traded. I was not able to enter a trade down here on the outside edge for the mean reversion because of these obstacles and the range. Here is the target, which is the IB high, which will, if we take this out, we've already taken the IB low. If we take the IB high out, it'll be a neutral day. And how many stops do you imagine are living above this high? That's fuel. All the retail guys that are over here thinking, yahoo, 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 and we took out the IB low, we're not coming back up. All these guys that have been shorting, I've got their stops up here. Some of them had their stops down here, which we just saw got taken out. And it'll be interesting to watch the trade when they run up through here. And I'll bet dollars to donuts that that's what happens. So I will hang on here until I go foraging for groceries until they make this run. I firmly believe that they will run for this liquidity. This iceberg has been plopped up here for donkey's years over here as far back as, well, where'd he come in there anyway, for Christ's sake? Wow. Right here. This guy came in here at 9:30. Just ahead of the IB being set. So this is an iceberg at only 60 contracts, but he's been sitting there that long. Here's one, there's one, but this guy's been sitting there for a long time. And that's the stops and this iceberg make up this liquidity, which you see here. And why it's all Bookmap does is paint the liquidity different colors based on the amount. It's all it is a graphic representation of the dome or the book. I mean, none of this is magic. And yeah, none of it. Or secret sauce, or, Jesus told me this, or I actually listened to one guy, this ICT guy, an interview with him. He's talking about, his philosophy is that none of this has got anything to do with auction market theory or any of that stuff. I mean, as I have understood what he says when I've listened to a couple of his things, that it's all controlled by a algorithm that knows where, and it's pre-programmed to take price where it's going to take price, and that he knows what that algorithm is, and he was given that algorithm by Jesus Christ. That's a whole bunch of pretty bold statements. I'm not saying they're not true because I don't know, but, and apparently he's a successful trader. He's been doing it quite a while, and he's got like 1 million something followers, 700 or something thousand, or it's incredible. Followers on the various, I don't know what, the Twitter and Schmitter, whatever those social things that seems to have a lot of people. And probably sold a buttload of courses and whatever else. But yeah, it's some pretty jaw-dropping kind of statements. And maybe he's right about this, it being an algorithm, and that's all got nothing to do with traders really, but that the algorithm goes and does stuff, and then of course traders jump on the wagon. My picture, it was put in my mind once long ago that trading is like a wagon, a bandwagon driving down the street. And as it starts moving slowly and the music starts picking up, all these little people off the street start running up and jumping on the wagon. And, that's how it works. And then by the time it gets, I forget how the analogy ended up, like the wagon tips over or whatever else, but that's kind of what it is, that the higher time frame gets the ball rolling, and then everybody joins in. And as I talked about earlier, all these guys that are going long are buying their stock, their shares, their futures contracts from somebody. Now, if that somebody has enough money to sell thousands of contracts to these guys, they probably have enough money to start dropping the price when it's time for them to take profit. Because everybody that's sold here, right? They bought, so they have a sell contract down here. So all they've got to do to get those stops out is just drop the price down, and they're going to start taking out all the contracts under here, all the stops under here, under this level, under this level, under this level. And maybe that's what this ICT guy, maybe that's what he means, that kind of thing when he's talking about. But he specifically says it's like an algorithm that's owned and in place at the CME, that they run it. I guess they tell it what parameters they want or something, and every day, and that's it. It moves the price that way. I find that kind of like the ultimate conspiracy theory, I guess. But my point about that is there's a whole buttload of people that trade different ways, and many of them are profitable. So I'm happy with this way, and that's what I'm going to stick with. And I'm just waiting for them to punch up through that liquidity right here and grab that IB high, and then there'll be a flush above. Now, this is where I would oftentimes, I don't know where I picked it up, but not too distant past, I'd find myself thinking about these breakouts. Now, I've never been a momentum breakout trader. I don't think I've consequently set it up in my journal as in my structured trade types that I assign to different trades as an error breakout. But it's the whole philosophy of the Richard Dennis's famous turtles. They were momentum breakout traders. I've heard lots of people talk about momentum breakout trading. as a real viable trade plan, setup, idea, whatever, For me, it's not so much. Oh. That's one of the ones I stay away from. And in this case, we're right at the top. Now, for me, when we pop through here and take the stops out, that would be the time to think about a mean reversion trade back down to here. There's no obstacles in the way. There's plenty of range. Well, not plenty. There's 6 handles. And so that's what I'll be thinking about. Okie dokie. PATH is the previous all-time high. And that's mark adjusted data because the contracts roll over every quarter. So this 32 here was a previous all-time high for the ES on adjusted data. The new high is up above there at whatever the hell it is. Oh, what is it? The new all-time high is up here at 65. Looks like this one, that looks like a blow off from some news, but this might have a little bit of, it's held for quite a long time and have some validity. There's some liquidity sitting there. It's a whole number, blah, blah, blah. Oh, are we getting there? No, right up there and just teasing the girls there. Just teasing the girls. There you go. Yeah, I would say that without question, they're going to take that IB high. And that there's just waiting to get a bunch of idiots to get their stops parked up there, I suppose. And I think that's, I'm not saying this is a pre-programmed algorithm, but I definitely believe that the higher time frame guys with more money, the Knights, the Citadels, the Goldman Sachs of the world, those traders, definitely do that kind of stuff. They, tease these people up here. And what happens with retail, because they know that the retail thinking is, oh, well, they're just foaming at the mouth to pick tops, They're going to short that. And boy, they lost their ass on a trade a few minutes ago, and they are going to teach that market a lesson. Boy, they're going to pick that stop and blah, blah, blah. Well, see the stats on retail success. But I think I do believe that happens. I believe that there's, if anybody says spoofing and market manipulation isn't a thing, well, then I don't think they've ever traded either. By people who have enough money. And, if somebody could trade, well, let's see here. Well, there's all pretty good size. Another reason for trading ES, minimum levels here are 100 contracts. But if you get into some thin markets or the overnight or around a news event, these levels will drop down to 10, 15. Well, there are a lot of people that can trade a 10 lot. I'm sure plenty of them in the Traders Lab do that. I mean, I don't know, but there you go. So all you got to, you throw a trade on there, you're going to move the market. Well, imagine if you've got millions of dollars and you've been selling contracts to all these excited retail people. They're long, you're short, and you've got lots of money. What do you imagine is going to happen here? Eventually. Also, on a little different side of the coin, the people, the retail guys that are trying to pick the top, they've got their stops up here. They're short like you are, but they've got your stop like the higher time frame is, but they've got their stops up here. Okay. So they keep the buying going. Retail, the higher time frame keeps feeding retail, keeping the momentum going. Jerk it up a little. Here they go now for the IB high. They'll take that out, and then we got 100 stops out there, and they'll zoom it in, and then all of a sudden these stopped right above this liquidity. It'll go up here, and when that does that, the market could continue on, or all of these short positions by the higher time frame, they'll just drop it down here, and away she goes. Down it goes. There will be a pop here at about 33.5. Or I'm sorry, 33, 22.75-ish. When they hit into these stops up here, there's they absorb that iceberg. We're neutral because we've made that price. We've made the IB high. But what's going to happen now? My belief is that it's going to have a further, that's not enough of a stop run for all the girls that were trying to pick that high. But, and also, it's the high from the beginning of the market. So from the beginning of the open. So I think we're going to get higher ground. And what I think, a couple of bucks, you could get a Starbucks, I suppose. It's interesting, though. One nice thing about the market, even if I'm not engaged in it, and I've made a bonehead mistake like missing that trade, not recognizing the trade or having recognized it in advance and been ready for it. The market's always interesting to watch and think about, how is this happening? How is this price action? How is this working? What is motivating these people to buy all this stuff? What is motivating them to go? Who knows? And this could well be the outside in opportunity. They went up there and took out 100 stops, and I got to rotate back down again to the version. But not with me because there's no setup. I don't think that's exhaustion. I can't believe that there's not more stops parked up here all the time. The existing high of the day and the IB high and all that stuff. But, nobody cares what I think. So there you go. Okay. Here's somewhat of an exhaustion, 232 stops out and then back down here to 1. Now, it didn't test back down to this level really. And it's in the middle outer space. So as far as I'm concerned, that doesn't mean much. It meant something to somebody, obviously. For whatever reason, there was that many stops there. I guess they were put under this swing area here or at this swing low area under this stuff, I guess. Don't know. And now they're going to, which in my opinion, the retail is now, higher time frame or serious money, whatever you want to call it, has reloaded now. And they're going to go ripping through that IB high and those stops up above there and poop everybody's party that are, imagine the guys that are cheering and yipping and yowling about picking the top and how they're going to make $1 million and send the kids to college. And all of a sudden they're going, but wait, well, what about me? Here we go. Here we go. Up we go, boys and girls. And they could dance around here. Don't forget. It's coming in at noon, right? Got 4 minutes or 6 minutes to the 12 o'clock. So a lot of shenanigans get pulled around those times. And I will be interested to see that happen. And pretty never make a prediction, but anticipate. And I very definitely anticipate that they're going to take those stops and go fully neutral by taking out the high of the day, which is the IB high at this point. And, we've already got the ETH high and the IB high and they're all parked right over here. So there's a couple of stats there. We've already gotten this one. That one, those two are, there's no stat for the previous all-time high, but it is definitely a spot. And I can't stop yawning, so I'm guessing it's time for my lunch nap. Now, okay, if you're looking at shorts and you're thinking it's a mean reversion, I'm off of that because of this right here. I want to see these stops really be taken out and then mean revert. But if not, if you think, you don't think that's going to happen or you don't anticipate that, there's 100 out here. We test back up. There's about 31 here. I don't see really what's come out of here. And so it's possible that you could conceive, view this as a exhaustion down. And there is scale 31 to 26, plenty of scale to the first obstacle, which is basically here. That's not true. I just realized something that I wasn't paying attention to. The developing value area high has been migrated up to here. See where that just happens to sit? Right there, under all that consolidation. Those tests. So they could be looking to accept value higher. But so far today, it's been reversed. Pretty obviously. And at the top of the hour here, which will be 12 o'clock Central Standard Time, right here, you can see that on Bookmap. I'll go rustle up some grub. Rub-a-dub-dub. Thank God for the grub. Yeah. Let me see. Oh. Okay, what are we doing now? Stops under the developing value area high. 118 of them. Oh, look at that. Oh, another 168 coming down to the VPOC. So this would have been a viable trade setup, or either, well, not here. I don't see any trigger or pullback or something, but let's say here when there's sort of a test and of this level. Okay, so you get short. You've got scale, no problem, right? 32. Well, no, not really. Right? Just only now are you scaled. Right? But it's ahead of the liquidity. And this it's a tough call because there's no real liquidity for whatever reason at the developing value area high, but it's definitely a level. And you can see all the time that it's been tested almost spot on. Look at there, it's coming up from the bottom and testing it again and then trading lower. So conceivably, you could arguably say that you didn't have an obstacle here and you're scaled and risk neutral. And now where are you going to go? Well, here's the mean. If you were thinking it was a mean reversion trade. So, yeah, it's all possible. And there we have it, 1201. And they've mean reverted down and left all the stops up there that I thought everybody was going to be interested in. It's not to say they're not going to reload and head back up. They ran out of bullets up here, and now they've bought and bought and bought. And because when these stops go out, right, these are sell stops because they bought long. Yeah. Anyway. And now it's a position or a situation that I would be looking for. It's the middle out, right? And I'm going to take this opportunity to be right back and rub-a-dub-dub, go find some grub. Well, what have we here? Look at this. Now, who was that masked man that said there was going to be a bunch of stops living up here? There's 1,500. There's 300. There's 300. Wow. And there we were when I stepped away right there. And wasn't that have been a pretty picture to set before the king? Not a trade I could have taken, however, because of I just have a problem, as I said, trading from the POC out. And at that point, none of this was up here. At that point, this was the high of the day, and the IB high was right here above. So, yeah, but look at that. Wow, they certainly got rambunctious up here, and now we've got a real extremely low volume area here, and a bunch of liquidity living out here. They say, looks like, and we have definitely taken a neutral day. So look at that. Yeah. So what are we doing now? Got no idea what's up here. And this little burst here through the IB high where right here. Now they've got this low volume area here, and they're of a second distribution up above. More plain here, I guess. Pop through the IB high there. This is the test when I took off. And there we are. Why, you know? What about the day, the market, the auction said that the S&P was suddenly, the value of the S&P suddenly changed up here and was worth this. That's just a problem with that concept, but the rest of it I like a lot. Well, shoot. Well. 3 holes in the ground. Yes. It's it will be interesting to see what the hell happens now. The problem with this position now for me is I won't be here for the closing swing. I have to leave at 2:30 or 20 14:30. First, pick up my daughter and my wife at their respective schools. So, oftentimes that's when the closing swing trade, et cetera, happens around, 12:15 to 12:50 into the close. And so, chances are likely I won't see anything that, well, I'm trying to think of what I might anticipate here, that the breakout across the IB high would have been I suppose, let me see here. No, not really. I mean, you could kind of make a case for the IB continuation here, or here, say, but that's so far above this. Not really a test. Yeah. So probably nothing for me today. Reading how what can happen in 1 hour, so much time watching the market, and it was one good trade which I discussed ad nauseum. This one I saw coming and wouldn't have done it. However, could that have been considered? I guess in reality, this could be considered the IB continuation trade. They blew through it, took the stops as I had decided, anticipated. And then we came down here and they couldn't get any lower out of here. They really couldn't get any lower here, right? So, and this is the IB high. So you could make a case for the IB continuation higher because they couldn't get, they got 42 stops out here. They got 3 out here. They got 2 out here. They come back down and get 1. So I don't know if I would have taken that had I been standing here. And funny how it's just within a matter of minutes, couple of minutes after I walked away that it popped through. But the point is it did. And there you have it. I try to learn from those things and go back and analyze them, not rear view mirror trading, but analyze would that have been a setup? What setup would it have been? And did it meet the criteria? And would I likely to have then taken it as I was supposed to? Yeah. Well, no, well. So in reality, then, after this little market maneuver at into the second distribution, we were trading all day here. I stepped away right there. We blew through it and created a second distribution above the developing value area high. So then, does that mean the context has changed and is up because we're getting higher highs, higher lows off the bottom? I believe so. Why would not be able to entertain a short? So, yeah, that's pretty weird. And what's to keep it from just turning around and hammering back down the other way? That's very possible also. Is this is just trading and taking out stops and then trading them. So I don't know. A lot of miners I don't know. Well, let's see now. What have we got going on here? It's so interesting to see how this picture changes, right? There was the IB high right around this. Can't miss that group right there, right? So we come, here's where I left, said, well, I can't trade out of here. We're going to take out the IB high. Go back and listen to the stream. I very definitely anticipated that was going to happen because of all the stops that lived up there. And that was the current high of the day. But if you look at this scroll in at this point, it looks like, which is basically 15 minutes, right? Like it just came off the bottom, went rocketing through there, and there'd be no place to get on that thing. But if you look at right here and you scale it out a bit, you see that it came through here, and then there's, as I was talking about a few minutes ago, there's that IB high in that area again. There's all these tests which would have confirmed the IB continuation. So it's real important to get the right look here. And I'm not sure what to do about that, frankly. Very, very obviously that we break through, take the stops, sellers step in. The sellers can't get any traction. We get exhaustion. There's the IB high, and up we go. And up we go. So I'm not real sure what to think about what we're going to do here or what I'm going to do with it. I'm kind of pretty sure that I'm not going to do anything with it at this point. I can't anticipate something that would be going to happen here that I would think was a structured trade. Maybe I'm just sleepy. I don't know. I'm not seeing anything that I would think was a structured trade out of here that I have. There's no targets any place. I mean, breakout over the existing highs, nothing. There's no 44 quarter is kind of the high of the MC. Now that's kind of right there. Oops, wrong thing. If we can go backwards, I don't know whether this has got to back up or not. I don't think so. Oh, we got to back down here to 32. The hell did that? How'd that move? Supposed to be here. The hell did that happen? I don't know. Anyway, so that is now the micro composite high as I have it drawn. Right over here. We're testing up to that again. It's actually quarter. Yeah, that's about right. And we're trading right at the top of it, but so what? You know, certainly not going to take that break out of the micro thing, and I can't imagine taking a short off of there as a yeah. So I'm not seeing anything. Obviously, this is outer space up here. Now there's the all-time high at 67-ish or whatever from a fluke, but there's nothing above there. There's no liquidity. There's no just an even book stacked all the way. That's just micro or algos or somebody. I mean, do you suppose that they've just loaded 100 plus contracts across the board? And here we are down here going the other way. Maybe what's his name's right about the algo theory. I don't know. Maybe he's right. Maybe. I don't imagine what trade I would have here. This is still kind of holding on to the IB continuation trade, but boy, that's a stretch. There's the IB high, and got a lot of liquidity, low volume area here, or you could talk about, I guess it could be a mean reversion trade in the second distribution. And the way that works is that this high volume node here is it would be the POC or the micro POC for this little upper distribution, as is, same idea with what's on the chart. So you'll notice how the chart, this stuff changes, because this is only profiling the volume that is on the chart. Yeah, so I suppose that was this mean reversion upside here is probably the problem is when this was formed, when this level was stops came in and this action took place, this was the high. So there was no mean reversion to speak of with the proper scale. That's another caution about RMT. You can be thrown off. This looks like a great entry down here. Oh, we're way at the bottom here. We're going to trade up. It looks like a good entry with plenty of room. But when this was going on, this was the room. So you have to be careful to keep everything in perspective. And moving this back and forth doesn't change. Oh, it does. By golly, it does. That's pretty cool. I stand corrected. So you could say that you had a mean reversion here, which isn't much room. See if that really works. Yeah, it's a pretty impressive piece of software. And now I've got no idea what to think about it. Except to say that it looks now like the context is up, and so shorts would not be on my hit parade. And that's pretty darn it. Yeah, I don't see any fantastic opportunities here. I don't anticipate any structured trades for myself that I have, or have statistics around. And looking at the bigger picture, what are they trying to prove? It just looks to me like they're just, as I theorized before, it's just they're just trading it. It's speculation purely. Purely speculation. Knocking on heaven's door here for higher highs, new highs, MC high, everybody goodbye. Humbug. Bah humbug. Long way down here to the mid VWAP and POCs. 30 handles. Is that right? 25? 40, yeah, 40 handles. Wow, a lot. That's quite a bouncer at the lunch hour, over the lunch hour. which always used to be the light trading day, so it's, look at here now. What have we got? There's a few stops. Few stops at the MC previous RTH high. And those are buy stops for all these people that are short. Picking the high. And I'm going to say, as I did for the for the previous high where the IB was, I would suspect a lot more than 320 be living up there. So I would suppose that when they break through that, they're going to get some more upside. Breakout trade that I won't take. And I don't really have an idea what trade I would take here, but not that one. That might just be a good opportunity to not worry about it. And they may break it out of the top here and just run the thing for the new all-time high. Who the hell knows? That's at that point. What do? Just jump on and hope for the best, or look for a little pullback and just try to get on it. There's so many different possibilities, and that's just gambling because there's absolutely no way that could possibly be vetted to find the same context, the same circumstances, the same levels, all parameters being equal. Impossible. Completely impossible. So there we have the Globex and RTH highs. New. It's not surprising. Kind of surprising that they're not at the same spot, but how could that be? And a new MCH. Now let's see if their stop's living up there. And if they get a stop run going, on who, I don't know. But if they get a stop run going somehow or another, they could take it higher, no problem. A squeeze, That's about all I see. Now somebody jumped in there at the half. Yeah, no idea what to think about this. No idea. And 8 minutes to the top of the hour, which is power hour, it is referred to, the 2 o'clock one. Sure. How valid that is, but that's what lots of people call it. And what to do, throw on along and just wonder. I just don't think that fits into the risk management plan for my trading business. Be fun, it's just gambling is fun. But, Tom has a saying, if you're going to gamble, go to Vegas, get the free cocktails, get the ticket for the buffet, just gamble and have fun. And that's, that's probably real good advice. Probably really good advice. I suppose. Not a lot of stops up there. Kind of surprising. 320, 15, 249, 700-800 contracts between here and here and here. Not any appreciable selling. And quite not out of the realm of possibility that could have easily taken the original trade I called, anticipated, and still be holding that runner, which, is magical and that kind of thing happens. So they're going to take it off here. Who knows what they're going to do? They just keep making new higher highs now, and they're getting dangerously close, within 30 points of that, 40 points or so of the all-time high. How do you do that? Just a slow grind up, It's a hard one for me. Sure, there's plenty of people that have got all kind of great ideas and how they're long and how they're making millions. Not me, unfortunately. Unfortunately. I guess the mean reversion for this higher distribution was something I should have been watching out for, or something, but it just doesn't. Seems like anything normally that I would have. It certainly isn't anything I would have normally vetted or captured statistics on. And it's just like this. What are you going to do with this? It's just a Hail Mary. Next time, buy the dip. Okay, so buy the dip. There's no sellers there. You buy the dip, and where are you? There's 43 to 47. So you've made your scale and your risk neutral and looking for higher ground and thinking you're a star. Against what? I don't know. Against a high, against breaking out of a high, I guess. Or I don't know. Coming up to 2:00, 4 minutes. Not sure about that. Bummer. That's 10 points or something. Yeah. And this kind of slow, grindy thing is not something I know how to do anything with. Sure as hell not going to try to pick a top and sell it. That's pretty much suicide, near as I know. Market's putting me to sleep here. It's frustration, I guess. Something. Well, let's see what happens with the 2 o'clock hour and get some water, and I'll be able to start thinking about shutting down the stream and heading out to the school run. Well, I was gone a couple minutes. I suppose something dramatic happened. Yeah, I guess not. All right, so well, here we are at the big 2 o'clock hour. Now, is this to buy the dip? And they're going to rip it to the top and go see something? Or are they going to go, thank you very much? You got everybody, as long as they figure they can get them, and they're going to hammer it down. That's, that's why this kind of an area has nothing for me other than the outside possibility of a mean reversion trade, but that's pick at the top. So far, it would be risk neutral. If you'd have done something up here, you're risk neutral about there, and down you go, I guess. But that's tough. That would also be a short risk neutral against a strong uptrend. So that's why it's not on my. Yeah. A real problem, I think, or not problem, but something to be aware of in days like this when I haven't captured the obvious trade that I had been anticipating, for example, today. More you wind on, the more I find myself starting to justify things. Well, maybe this, like even comments. Well, maybe I guess this could have been considered a risk neutral, a mean reversion in the direction of context, that kind of thing. It's just, I think that's inviting disaster, kind of like that's almost like FOMO or chasing a trade, kind of. So I'm when I recognize myself thinking that way, I ratchet up the risk aversion and the scrutiny on any entry. That's to try to keep from doing them. It's just I'm not sure. I'm not sure if that's going to work out or how that's going to work out in the end, but that's where I'm at. And I guess I have a basic philosophy that, you can't go broke by preserving your capital, protecting your account. So in this case, that's the way I look at that mindset. If the day is worn on and I start to become more creative with looking for trades or whatever, that's just heightening the risk on the account. And if I don't trade at all today, guess what? I have not damaged myself or my account, and I can trade tomorrow. And that's the ultimate objective for every trader. You got to be able to trade tomorrow or forget it. You can have all the phantasmal ideas and jibber jabber you want to type somewhere on some chat room, but that's where the rubber meets the road. And it comes down to you, your account, and the market, period. What all these other geniuses have to say is just horseshit and bus tickets. Or as Eddie Koch used to say, bullshit and bus tickets. And he's pretty right. In other words, worthless. Yeah. And I'm not saying that, someone that knows how to read the market more differently than I do or is less risk averse or whatever that saw this as an opportunity to short. Maybe this little pullback here to short for this mean reversion isn't right. It's just not in my world. That's a counter rotation trade. The obvious context is long or up. So there's a bunch of reasons why that doesn't fit my plan. And I may regret it. Might dump clear back to the POC. Very likely. Very possible. Who knows? I mean, if you look over here, here's the IB high, which finally got taken out here right at the noon hour, 12, just after 12. There's the value area. It's blue. Here's the mean IB low, mid, BWAP, POC. Long way to go down there. They've traded up across this whole thing and created a new upper distribution. Value hasn't moved up, just interestingly enough, and nor is it likely the POC will, because it's just graphically this is the POC because this is the most amount of volume that's traded in the day. That's the point where the most volume is traded. So this little boy's got a long way to go to surpass here. And that's all there is to it. It's real simple. I mean, it's not mystical or all these terms that people like to throw around and act like they're real special guys or, have some insight that's generally just plain as a nose on your face if it's just explained properly. And looks like that will be the trade maybe here from the looks of it. They're going to wind her down there from 7 to 1, so there's 7 handles short. That mean reversion around the off the high is probably a good trade, and the NQ is obviously thinking that it's the direction to go. Now, they're both, well, they are not both. The NQ is just approaching its developing value area high. ES, not so much. It's just kind of futzing around up here. And what they're going to do about that, I don't know. I would imagine it's probably going to be resolved while I'm gone, which is in another 20 minutes, unfortunately. Yep. Here we go. 2:13, Central Standard Time. 15th of February, 2024. My, where does the time go? Time flies, and I'll share with you, younger boys and girls, that the older you get, the faster it goes. So make the best use of your time now. And another old saying that's so true, life's what happens while you're making other plans. This is your life, so make the most of it. One day at a time, each day at a time. And this is going to really frustrate me. Undoubtedly, what will happen here, maybe this is, I should not say that is bad. Something else, I got to watch being negative conversation. Words are real important. Your brain listens to what you say. I know that sounds kind of contradictory because how do you talk without your brain doing it? But you know what I mean? The ideas that put out the words your brain listens to and buys into, I believe. So continually saying I'm a bad trader and I always lose this trade and that kind of thing, that's real bad idea that needs to be addressed and eliminated or corrected by anyone, and me included, and especially. Well, they better hurry up, or they're going to have to do this without the old cowboy here. I'll tell you that right now. Because I got a couple of things that are way more important to do than staying here. But two lovely ladies to go pick up from their respective schools. And I know a couple of sleepy cats will be pretty happy when that's taken care of and they start getting all the attention they deserve. Cowboy up and manage your trades. Well, what are they going to do now? Okay, what are we doing? I was busy typing something to the T-Lab, and I'm sure get a bunch of flack about that probably, but yeah. Yeah, so it looks like that mean reversion off the high will be a payout, and that's great. Darn it. Well, there they go. And look at that. They're going to just fuss around here right up until the great one here has to go. So that's pretty darn disappointing. Also disappointing that I am, well, it's not disappointing. It's part of my trade plan. This is not somewhere I would be. It doesn't fit. There's no trigger. It's a counter rotation trade, counter context trade, whatever you want to say. And yeah, it is mean reversion, which can be counter rotational in a rotational environment, but I'm not sure this really is, or maybe the concept is that once we move into this higher distribution, then look at that. Here's the test of the developing value area high and up to the top and then back down to the bottom. So that's a mean reversion around this thing, I guess. A little real clear in that RTM or RMT, whatever it is, rearview mirror trading. Not so clear at the moment when it's happening. That's the one. That's the key. So easy to read in hindsight, and so difficult to spot in the heat of the moment. NQ pulled right back down to the traded through the developing value area high that I pointed out, and then it's down to this low volume area, low volume node, whatever you want to call it, and a little bit of a re-pull here. So what are they going to do? What are we going to do now? Who knows? So I'm going to start getting organized to go on the school run here. I got 3 minutes. So that is that. Okay, boys and girls, here we go. I am going to wind the stream down now. It's the 15th February 2024. I will not be taking a trade. I will disconnect the trade facility. Boom, there we go. And all the best. Tomorrow's another day.